All right, we're recording. Who's doing the chat? Yo, okay, cool. Let me get rid of this. So before we get started, I guess I'll do a little hello. Who am I? My name is Ryan Tyther, and no, I'm just kidding. This is not an AA meeting. This is not a I'm the best meeting. This is just a simple session of being able to teach you guys how I trade and what I do to look at the markets every single day, how I break it down, and how some of these people have been able to learn. My name is Ryan Tyther. I'm from New Jersey, 23 years old. I started trading 3 years ago. I saw a friend of mine make 10 grand in one day that barely graduated high school. And I was like, bro, how did you just make 10 grand? like, look at that. I'm like, I'm making like 300 a week and you're sitting here making 10 racks in one day. That's cool. So tell me. He explained to me, talked about binary options, he talked about betting in certain directions of the market. Didn't know about Forex for about 2 months. Put my first $200 in about a month after I started learning, blew it in that same day. Because the minute chart's very volatile. It doesn't like me that much. So blew that, and I got into a method called the market maker method. December 2015. Studied my ass off, guys. I literally was obsessed. Think of one thing you guys think about every day. I was more obsessed than you. I was every single day looking at these charts. I was at work on my charts. I was with my girlfriend on the charts. At the movies on the charts. I was at the charts every single day. I was so obsessed with making this shit work. I was like, I gotta figure this out. So I studied it, and after a year and a half of everyday complete horseshit and emotional trading and going to be the happiest person ever and then wanting to kill myself in the same day, I finally figured it out. I cracked the code, and I had enough confidence to be able to trade on my own. Had my first 4-figure day, $1,200 in one day, trading off the back of the trash truck. I was a garbage man for a year and a half, and I worked a valet job for a restaurant company that just mainly did restaurants and dealerships. I was working 80, 90 hours a week trading off the back of a trash truck every day for one New York session. I had my first $1,200 day on the back of it. I was fired up. I was like, fuck this job. Fuck your trash. Like, I'm out. So it's been a fun ride, and I never really wanted to get into the industry, making it public like how I am now. It's a very dramatic industry if you guys haven't seen. Very dramatic. A lot of people like to complain and whine about everything. So I stayed hidden until about a few months ago. I said I'm going to make a free group, and 4 months later it's at 500 people. I do a group chart analysis every night, Sunday to Thursday at 6 o'clock p.m. PST. And if you miss it, I record it so you can put it up there. I'm just here to help people. I want people to win. You can learn from my lesson. I'm not in any way a professional. I don't say I'm a professional. I'm trying to be a disclaimer here. So don't take everything that I say like, oh, this guy said this, think that. Like, this is how I trade. This is why I want you guys to be able to trade it too. So whatever you do is on your own. If you listen to me, awesome. If you don't listen to me, awesome. Trading, there's so many styles to it. I'm going to show you my trading style, the one that I use to give me the precise entries and how I predict the market so accurately. So what I'm going to do is I'm going to break down how I look at the charts and pretty much just go into detail. Some may be a little sporadic. If you guys have questions, just raise your hand. I'll pick on you. I'll stop talking. Like I said, I have ADHD, so I see the slightest finger. I'm going to pick you. No, I'm just kidding. But I find it in the face. If you cough, it's a sign. You. So what I do every day, I use certain EMAs. So the exponential moving averages is what they're called. Just kind of go over what you guys are seeing here. It's exponential moving averages. I use and I'll zoom in a little bit too so you guys can see it. Here. You're going to see a yellow, red, slight blue color, a white one, and then you're going to see a dark blue one right here. That is I like to call them their food condiments, right? So you got the blueberry, the mayo, the water, the ketchup, and mustard. Simple terms, what I was taught makes sense. It's the 5, the 13, so the 5 is the yellow, the 13 is the red, the 50 EMA is the water, the 200 EMA is the mayo, the 800 is the blueberry. I use them to help me identify trends. I use them to help me identify pullback zones, reversal zones, hits to continue with the trend. They are very, very accurate because a lot of the banks use this stuff. Market makers, if you guys don't know what a market maker is, it's just a person with a lot of money sitting behind an account. It takes about $100,000 to move the market 1 pip. 1 pip. So think about, you caught 120 pips. That's $1.2 million. That was needed in order to move the market that many pips. And it's traded every day, 24/5, the biggest market in the world. So if you learn to leverage these types of stuff, you can do it. So the first thing that I do, and there's a question, write your EMA on the chat. Yeah, I'll do that later. So first thing I like to do is identify a trend. We all know what trends are. Trends are just like uptrend, downtrend. So clearly this is a downtrend. So it's going down. So ultimately, you want to look for sells. So this is based off the hour. What I do personally to go off of trends, I go to the higher time frame, right? Because if you look at the 4 hour, oh, look, it's going down, right? So that's a clear trend. But if you go to like the 15-minute or the 30, you'll notice that it may not look the exact same thing. Oh, look, it's an uptrend. But if you don't look at the bigger picture, you're going to fuck yourself. Because everybody here that has never traded Forex before is thinking buys. Buy, 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 buy. Because, oh, look, it's a new high, it's a new low, it's a new high. It's got to form a new low and keep going up, 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 up until infinity. But what they don't realize is that on the 4 hour and the daily, this shit is going down. So anything that's technically going against the trend is what I like to call a pullback, right? So a pullback looks like this, right? The market moves and stretches like this. It goes down, forms a low, pulls back, forms a lower high, because this is the high. This is a lower low, lower high, lower low, lower high, lower low. It's going to constantly keep breaking the previous lows. And if you constantly keep seeing new lows, you got to constantly keep seeing new highs. That's the basics. So right now, if we're looking at this pair, we have a low here. What is that? That's a new low. This is technically a new high, right? So ideally, overall, we want to be looking for, technically, we want to be looking for reversals back down with the trend. That would be ideal. But I'm going to further explain a little bit about what I do in order to like identify why I actually believe this is going to keep going up. So I'll let you guys, what is this? You have questions already? Okay. Yeah, there you go. Yo, T, fill them in on that. So let me delete this. So because I'm looking at it like this, I see that, okay, it's a simple downtrend. I need to be able to identify if it's going to reverse here or shoot down. Now, the cool thing about what I use these EMAs for is that the 50 EMA is actually one of the most precise EMAs in all of Forex. If you actually look at the 50 and the 200, the cross of those two is called the golden cross. Literally one of the most traded, a lot of people in stocks use it. Currency traders can use it on lower time frames. They only trade when they see the cross of those EMAs. I use them for pullback zones. Notice how on the lower, this is the 4 hour, but let me show you the 1 hour. Notice how every single time it comes down, EMA hits the 50, comes down, hits the 50, comes down, 50, down, 50. It's like they use it as perfect pullback zones. And I use it on the higher time frame because technically when it breaks the 50, it needs to come back down to retest it to then shoot up to the next EMA. It's like levels. So the first EMA on a reversal that it has to hit is that water. It's either going to break it and make a new trend, pull back and retest it for a new higher high, lower, higher low, or it's just going to continually bounce off of it and keep going with the trend. So for this instance, here, as you see, it kind of broke it, right? It retested it right there and then shot back up to hit that mail. It hit the mail. It's a guarantee. I don't care about the extra pips there. It's not guaranteed. What's guaranteed is the hit to that mail. Now, what happened here was a pattern. There was some sort of divergence. I think this lines up perfectly. Yeah, there was divergence on this little time frame. I'll go over divergence too. That led us to believe that this thing was going to continue down, and it kept doing it. So now that we see that it broke it again, what can we expect? Because technically, if you see a breakage, like say, let's say this. If this is a high, if this lower, if a downtrend is a lower low, lower high, lower low, lower high. If you see it break down low and then it shoots up to break this recent high, now you have a new high. Is that plugged in? One second. Make sure this doesn't break. It said it was like a lower battery for some reason. Gotcha.
Keep going. I got you.
So Oh, I dropped this. This is not rehearsed, guys. I am not a professional. Okay. So if we see a break, right? This is the downtrend. High, lower low, lower high, lower low, lower high, lower low. Now, if it breaks this recent high, you now have what's considered a new high. So when there's a new high, there's got to be a new low. Simple. So what do we do? Now that you have a new high, you just simply wait for the pullback. And when it forms that pullback, it normally likes to retest that recent high, because now what was once support resistance now becomes, or what was once resistance becomes support. Do you guys know what support resistance is? Okay, cool. So I don't have to go into the complete basics. Once resistance is broken, that resistance becomes support. So technically, when you're looking for an ideal pullback, this is what technical traders, price action traders do. They wait for it to come back to retest that recent zone, and then they wait for that shot up. This is their entry right there. Because if it wants to continue, what it's going to have to do, it has to form patterns. It's not just going to go like this. Keep breaking and keep breaking low. Like, that is not normal. That's not normal. It's not going to do that. If you do see that, let me know. And it's probably CAD. That's why I don't play USD CAD. Because that fucking shit will do whatever it wants. I hate that pair. But, so if whoever trades that pair, like, and you catch pips, like, kudos to you. I would never trade that. But ideally, I just I look for this simple, I keep it stupid simple. And then once I understand new highs are broken or new lows are broken, I just consume, oh, it's a new low. All right, so there's got to be a new high. Oh, it's a new high. All right, it's got to be a new low. Keep that simple type of mindset, or like that, the technical aspect to it, you guys will do just fine. Just off of that, I know people that do 7 figures doing that stuff. A friend of mine made 200 grand in the last 2 months trading literally, oh, it broke support. All right, it's going to retest this resistance line, and this EMA, it's going to drop. And he puts 10 standards on his trade and literally wraps out. He hit me up the other day. He's like, yeah, man, it's a slow day. I'm like, what's up? I only made 2 grand. I was like, bet. Go fuck yourself. I was just like, he's from Germany. The guy does what he does. But so for this simple concept right here, right? This is what I was explaining on my analysis. I went over this. I have EU continuing up for a buy, right? Even though it's an overall downtrend. I have it continuing for a buy for this simply in a short term. So this isn't a buy you're going to hold for 50 to 100 pips. This is something you're going to buy it. It's going to be in and out. So for a short term trade, reason why I'm saying buy it is because here's the right. So you got a high, you got a low, you got technically a new high right there because that's wicked, and then you got the new low. Well, now you got a new high. This is the recent high right here. So if there's going to be if that's a new high, what's going to happen? New high is right there. What do we want to expect? A retest of a new lower, of a higher low. That's why I say when it breaks the water, look for the retest of it to then go up to the next EMA. In this case, my analysis on this pair specifically was that it may either shoot down to then go up towards that nail and hit or take profit right there for a guarantee, or it's gonna consolidate on this catch up, which these EMAs are actually the other EMAs in a lower time frame. So this catch up, this 13 EMA on the hour chart is actually, believe it or not, the water, which is the 50 EMA on the 15 minute. So I'm able to see, oh, well, that's why I like say, if it hits this EMA, it's guaranteed to go to that one, because they all do on every single time frame. The higher the time frame, the more of a prediction you can look for. So let's just say this was like the 4 hour, the daily. I can literally tell you that, oh, each candle is the daily. That means from this point up, for the next week and a half, 2 weeks, it's gonna be nothing but rise. But because it's the 15 minute, oh, for the next few hours, it's gonna be a rise. So this could be stop hunting. What I assume, if you guys want a precise entry on this pair right now, wait for the retest back down to that water one more time. It'll shoot up right up to that blueberry, which is the Mayo on the 1 hour. Crazy. Yo, this is EU. Euro USD. So this is how I'm able to identify Simple stuff, right? You can use this on any time frame. This is why I like it, because the people are like, oh, how do you know it's going to go over a long time? Because I take the same concepts that I'm literally showing you the hour and I apply it to the weekly. I apply it to the daily. They just form slower. And this is why people get impatient. Oh, dude, I had a losing week. Well, did you look at the higher time frame? It's hitting an EMA that normally consolidates for a couple of weeks after it hits it. But people don't understand that because they're not taught that. So over on this pair, we're looking for a buy. Another reason why we actually had this predicted. So 2 days ago, I had this predicted for a rise for the midweek reversal, Wednesday, Thursdays. That's what happens on these days. The market will push in a certain direction, Sunday, Monday, Tuesday, and then Wednesday, Thursday, it will pull back either against the trend or with the trend, depending on where it's been pulling back to. So there's this thing called divergence. You guys know what divergence is? You guys learn divergence, you're going to be the happiest people. It literally tells you when reversals are going to happen, either with the trend or back against the trend. So in this case, the reason why I was able to predict this rise right here, and it happens every time frame. It even does it on the minute. Not even kidding. It shows you the same. See this green line right here? And for those of you on the Zoom, there's this green line here. This thing's called the Trader's Dynamic Index. It's a combination of multiple indicators. So you have the RSI, which is the green line. It's the Relative Strength Index. That is real price. So you guys see this, the candlesticks, that's price. But if you guys notice something, and I'll go over to divergence, real price is this candlesticks, but the realist price is this. Because this doesn't go off of wicks. This RSI doesn't go off the wicks. It goes off of the close of the candles. And it goes off of where price is really going to go. So if you notice here, something that's weird, right, is that price from the close of the candle is going in a downwards motion, right? Well, the RSI is going in an upwards motion.
And they correlate, correct?
Yeah, these line up perfect. I'll show you. Close here, they line up perfectly. Yeah. So you can literally see what I do when I see this. I start looking for specific reversal patterns. So if you guys are not all new, you should know what double tops are, double bottoms, head and shoulders. Those are the prime reversal patterns that I specifically look for, because when divergence happens, those patterns happen the most.
Who does not have a double top?
Double bottom is a W, double top is an M. So literally it looks like this. Like that's a double bottom. A double bottom is when price comes to retest the same zone twice and doesn't break it. Because technically, if it breaks this, that's considered a lower low and it's still a downtrend. But if it doesn't break it and it holds that position in the same area as this one, that's technically letting people know, like, hey, something's happening. They're not breaking this price for a specific reason. And you can bring this back to the banks. If the banks are not breaking certain lines, that means they have more sellers in this specific direction. So if you notice that certain price points are not being broken, that's because the banks are noticing that a lot of people are actually technically selling right here. So what they're going to do in order for the banks and the market makers to make money is they're going to throw specific patterns like this to get people to believe, oh, look, it hit a low. Let's sell right here. They sell, but because they don't see the divergence, they just think it's going to keep going down. So they keep selling, and it reverses here. And guess what? Long-term, new people, they hold this for a sell. Oh, it's just pulling back. And they're like, wait a second. Why is it still going up? And people's accounts get blown. People go like, what the fuck's going on? Because they don't understand that psychology is to make the market makers and the banks want your money. They're going to throw these patterns to let you know, like giving people that understand this a warning. Yo, we're going to reverse. Don't sell me. It's vice versa for M's. If it's an M, a double top, that's another indication that banks and the market makers are telling you there's more buyers up here. If we want their money, we're going to go against them. We're going to stop them out, hit their margin levels, take their money, and then we can continue back with the trend. Lower time frame parts like this normally indicate just small pullbacks. So in this case, you have 1, 2, 3. It's a triple bottom. It reversed back up, but overall, it's a downtrend. We know this. So technically, this whole move right here, for you guys here, this whole move is a pullback. It's not the real move. So if we understand that, all we got to do is know where it's going to go to in a specific amount of time to understand the next part for it to then continue back with the trend. And how do we know where it's going to continue back with the trend? Divergence. So divergence predicts reversals against it and with it. So right here, you notice that price is going down, and then you have price on the RSI going up. Oops. So going up. First indication for a reversal. What I do, if you guys want a precise entry, right? Because technically, oh, if you just try to trade divergence like this, oh, look, it's divergent, everybody buy. Bro, that's not even like the best thing. This thing could be divergent for a whole month and still continue down. Prime example, USD CAD. Fuck that pair. Because it will be divergent for a whole month and still go down. It doesn't have to. That's why I stick to these specific pairs. If you guys see, I stick to these pairs specifically because they follow the rules that I've noticed. NZD pairs don't do well with me. CAD pairs don't do well with me because they don't like to obey the rules. They can go up 100 pips and then down 200 pips in one day. Doesn't make sense. I don't like it. So I like to stick to the ones that follow what I look for. And in this case, if you guys want to play this against the trend, what I tell people is you're not playing that buy. Why? Because you're not a fortune teller. Unless you're psychic and know it's actually going to go up that high, let me know. I want to know. I want to see how you fucking knew it's actually going to shoot up that high at this exact time. You don't know. So we have to play the guarantees. What's guaranteed after this big push? Because this is your indication. Oh, it broke the water. Oh, it broke the new high. That's a new high. That's your indication for it that it has to pull back. The next day is a guarantee. The next move is a guarantee. You can think on any time frame. So in this aspect, this move after it happened this day, it's all happened last night. This is from London session to New York session, or this was New York session. Actually, let me see. I gotta see these properties. Show periods. Yeah, so if you guys see the period separators between each day, this is the hour chart. That means between each one is one day. So you can see that this all happened literally all yesterday. So if you were watching New York session, this was London session. I missed London session. Who cares? You know it just formed a new high. I'm gonna catch that pullback right on the wick of that water. Let's see how many pips that was. Right off the wick. 74 pips on EU. I tell people, yo, if you get 20 to 30 pips, you're good. Because guess what? I don't want you guys thinking like so many people come in, especially if you're brand new, especially if you're looking at the lower time frames. People are like, yo, I'm gonna catch 100 pips today. It's like, bro, be realistic. All you need is 30 pips. You got 120, right? If you catch 120 pips a week, you could be a millionaire. You don't need to catch 1,000 pips. You just need to catch a specific amount consistently. I know people that literally only trade 3 times a year. They catch 50 pips and they make $50,000 off of one trade. That's all you need. You don't need to be looking at your charts 24/7 trying to get in every single move, because here's the thing, the market's not going to move like this every day. It's going to have its time periods where it's going to be moving. Oh, yeah, I had a bad week, man. Markets weren't moving my way. You probably shouldn't trade every day. Take a break. That's what it's for. And we were just joking about this before. I hate people that say, oh, yeah, I caught 2,000 pips. I don't care. That's not realistic. That's not realistic. What's realistic is catching a consistent amount of pips. If you catch 30 to 50 pips a day or 30, 50 pips a week, I don't care. It's consistent. You're winning more than every single other person in the market. Straight up. All you have to do in order to make more money is increase your lot size. You guys know what lot sizes are? Cool. Lot size is just pretty much the size of the trade. I know you're brand new, so what we'll do is this. Like, if you, oh, yeah? Okay, cool, perfect. I was just making sure. So the higher the lot size, you go based off per micro pip. If you catch 1 pip on a 10-cent lot, that's $1. Catch 50 pips, that's $50. Standard, $500. It's basically. But that's what I'm trying to make you guys understand. So based off of what we're seeing here, the divergence, which I'll even go back and show you guys even more examples, because another pattern, like I said, that pretty much shows when divergence happens is not only a double top or a double bottom, but it's a head and shoulders. And the head and shoulders is my favorite pattern of all time. Let me show you why. So, hold on. Are you guys having questions in here? One sec. Yo, do you count the wicks for support resistance? Yes, I do. What pairs follow the rules? These ones here. Is divergence only based off the RSI? Yeah, so it's based off the candlesticks and the RSI. You have to see price clearly going down in a certain direction and RSI going up, vice versa, right? So if it wants to be a sell, that means price needs to be going up and the RSI needs to be going down. You always draw the lines based off of the direction. So downtrend, if it's going to be an up, you have to draw the lines underneath the RSI and underneath price. If you're drawing it up, that makes no sense. It's literally, that makes no sense. But that's divergence. So what I'm going to show you guys is some head and shoulders patterns that is able to, well, actually, here's one right here. It was a pullback, so it's not the best reversal, but it was a pullback here. 1, 2, 3. Left shoulder, head, right shoulder, guaranteed drop down to the next EMA. And this is off the daily, off the 4 hour. And the daily actually looks even more precise. I'll show you. I can zoom in. Even cleaner. Head, left shoulder, head, right shoulder, drop. And you could have gotten the precise entry just based off the 4 hour, which it goes right to what? The EMA. Bounced off the EMA, shot right back up. But a head and shoulders is simply, if I can put it the right way, when price shoots up, it starts to show somewhat divergence right here. So if we're going to start it here, this isn't actually the best one. What actually led me to believe this is going to be head and shoulders is you see from back here, price is hitting a wall. Why is price hitting a wall from June 20th all the way to September 18th, the next year? That's because they're probably going to shoot against the trend. So I saw this. If I can draw this. So we're drawing from here. Price has been divergent since here. You had price going up for a minute, but you had price not breaking anything for a whole half a year, 6, 7 months. And you can break it down. So if you were trading a longer time frame, how you trade the head and shoulders patterns is you don't trade these because you don't even know that it's going to be a head and shoulders until this drop happens. Because what happens after a new low, right? So here's all the recent lows. I can't see. Here's the most recent low, right here. 1, 2, right? So that's the recent low. You had price break through that support, and what did it do? Here you tested it. So this is not always guaranteed, but what's guaranteed after we have a new low, because this is the most recent low, is that pullback to retest the new now resistance and / or EMA for that guaranteed next drop. So this is the 4 hour. That whole beginning of the week, you could have caught all those pips because that's guaranteed. You know what's crazy? The pattern, like I said, there's patterns in the pattern. Let me show you guys some cool shit. I look for double tops, head and shoulders, right? Well, if you see an overall big head and shoulders on a higher time frame, typically what tends to happen is the left shoulder, the head, and the right shoulder tend to be other patterns. So this is actually a head and shoulders. The head of this overall head and shoulders is a head and shoulders. Left shoulder, head, right shoulder. Drop down, pull back, doesn't take out the recent high, throws a railroad pattern at the top, guaranteed drop. You could have caught that. Oh, but it got even more. Oh, but we have an overall head and shoulders. So this whole pullback for the next 3 weeks, ooh, it came up to the top here. Well, actually, you could have caught this, right? So this pattern right here, I'm going to zoom in on it. Show you guys some cool shit. Watch this. I'm going to highlight the railroad pattern. So I look for specific candlestick patterns. Railroads, which is literally this pair where you got one green candle going up and the red candle is going immediately down. Looks like railroad tracks. That's either an M or a head and shoulders. So we're on the 4 hour. Let me show you what it looks like on the 1 hour. So what day is this? This is September 27th. So I don't lose track, so let's go this way. Here's this. That is the pattern. That is actually, it's not the best looking one, but that is an M. Right at the peak. Like that. It's an M. It's a top. What I can do is I can go to the 13. So let's do this. Go to the 27th. Is it? Oh, there it is. It's actually, no, it's good. This is an M. It's not the best looking one. It's not like the one I would necessarily trade, but it's actually, you got one peak up here and then the second peak. As long as this second peak doesn't take out that peak, that's an AFP trade. It's away from peak trade. That's still a sell because that's a new high. Come down to low. Oh, you got a lower high. That's another indication for a sell. So if there's not a new high, you have to assume that it's going to be a new low. So we got a lower high. What's next? A drop. So you could have sold that, and you could have even sold that. What is this? Is that another? I can't go lower because I don't have the 5-minute chart. But if it loads, this was another pattern up here. You could have caught multiple because each EMA, like I said, is another EMA lower. So this 15-minute catch-up is actually the 5-minute water. So you could have caught the 5-minute drop if you were a scalper, however you want to do it. But let me see if I can find you guys a clean pattern. We'll go to G. Oh my goodness. Let's do this one. And we got questions. Can you write which pairs follow the rules? All except NZD, CAD, thanks. What did he say was guaranteed? Pips is guaranteed. Let's go to the 4 hour. And when you guys see it. Sure. What pattern is that? Double top. You know what's even crazier? Look at this weekly. This is how I predicted. Who caught all these pips those last few weeks? So this is 1, 2, 3, 4, 5, 6, 7. So almost 2 months ago, when that railroad presented, this is guaranteed from the Mayo down to the water. For 3 weeks straight, we sold GU. 3 weeks straight, because this was a guarantee to go down to there for at least a pullback. You got a double top, which is an M, but 2, it's divergent. Over here too. Yep, look, you use it everywhere. You have price coming down on the close, and then you have price going up. The best divergence is when the beginning of the divergence, so that peak right there, that lines up with here, the best one is when it's overbought. Because when price is overbought, that's telling you that the buyers are now starting to get exhausted in the market. They have to sell. And I don't know if you guys know this, but there is literally a rule in Forex where when price starts rising to a certain extent, by law, they have to push it back down. They have to. It is a law. They literally, I don't know which law, but I just know it's absolutely certain that once they shoot this up for a certain amount of time, they have to pull back to relieve some of the buyers, to relieve some of the sellers, depending on the direction. So that's what they do. In this case, it threw a double top, a divergent double top that was overbought, and it threw a railroad at the top right here, which GBP pairs, by the way, GBP pairs and CAD pairs throw the most railroads. Fact. So you can get a lot of patterns off those pairs. That's why I like GBP pairs. Oh, what's up? It signals a possible reversal. I can't say it's a guarantee because, like I said, like this thing could just continue to keep going up. But if you see it on a higher time frame, so this is the weekly. So if you see it on a weekly, that little tiny pull, even though you know it's supposed to go down to that EMA, guess what? Simple Forex, it's going to drop 478 pips. So you know, oh, it formed a double top through a railroad and it's divergent, overbought. This thing's dropping to at least the water. I saw this on the weekly for the next 3 weeks straight. My analysis was just sell, just sell it. Like, yeah, you could swing trade that shit. And it's like, it's only 3 candles, but that whole 3 candles is all of that. Notice where the pullbacks were. To the water. Down to the water. And then it consolidated a little bit and continued down. And now it's getting to that point where it's going to hit that Mayo. And guess what it's going to do after it hits that Mayo? Here's the most recent low. Every pattern, it doesn't just shoot up like this. It won't just keep going up and up and up and up. There's a low here. They only hit it one time. They're going to go retest that shit. It's going to shoot up, and it hit the Mayo, and it's going to throw a railroad, an M, or small head and shoulders on a lower time frame, and I can guarantee you it's going to retest that low. So there's this possible signal. Any of you trade, you're waiting for it to hit that Mayo, or you can go in a lower time frame and buy it because it will shoot up. Wait for the pattern, railroad, M, head and shoulders in a lower time frame. And if you sell it, got your take profit. If you want to be even more precise, because someone's like, how do you know? Sometimes what I do, I just put at the recent close of the candle. Because if it's going to, it'll have to retest. It doesn't just bounce off at once and go up again. It's not like straight line shit. They do zigzags for a reason. Retest, go up. So technically, if you guys want to see what it's really supposed to look like, every time they have to retest the line. Yeah. If it's going to be against the trend, so if this is going to be a full-on reversal, this is a fact. If it's going to be a full reversal, they have to throw a W, M, or a head and shoulders. That's why I look for it, because if this is going to be a guaranteed reversal, bro, it's going to come up, it's going to shoot down, and when it comes up, when it shoots down again, they're going to continue up, boom, boom, boom. It's going to take out this recent high. It's going to form a new high. And as that new high forms, it's got to pull back. And guess what's going to happen as that starts to happen? Let's change this. It's going to bounce off that Mayo, bounce off of here, and it's going to kind of run across. And guess where it's going to bounce off of? That Mayo on the hour, which is the water on the 4 hour. And we all saw what happens when it breaks the water on the hour. It comes back to retest it and then shoot back up. It's the same concept, except the Mayo is the 4 hour. The Mayo on the hour is the 4 hour water. So if it breaks that Mayo, expect it to come back to retest it. You got another whole 2 weeks of buying. So you're able to predict it. Now, how far do we know where it's going to go? How far do we know? Let's see. This is the 1 hour. If it breaks this 4 hour water, like so, let's say it comes up there, making sound effects, ADHD, told you. Shebang comes up and it retests. Y'all have that much room until it hits that Mayo on the 4 hour. So let's see, where's this? Let's say it does pull back, because actually what's going to happen is, I'm going to make sure you guys see it, because I need your eyes to get adjusted to this. As it breaks it, price is going to start curving up, and this, and then we can catch, if we buy it right here, 190 pips, 200 pips. How many do you need a week again? 30 to 50? I just gave y'all a zone to know when this happens, y'all buying it.
Right.
So now all I'm doing is I'm waiting. That's it. Now it becomes a patient game. Oh, see, I just literally, if it wasn't for me having to explain this, I can literally draw this out in my head in like 30 seconds. It's the same pattern every time frame. The higher the time frame, the longer it takes to play out. The lower the time frame, the sooner it happens. But people don't think about that, because all they do is draw lines. Oh, it broke, it goes up. You need to understand the psychology of why they're doing it. So I look for M's, W's, head and shoulders. These are the perfect patterns that indicate when these pop off and they come back to retest it, it's guaranteed to go to that next hit. Which, if you guys see where I drew this, guess where it's lined up with? Most likely the recent high. Because as this starts to curve, because it's actually, I drew this wrong. As this starts to curve, this won't necessarily come straight down. What it's going to do, it's going to start kind of evening out like so. So that Mayo is actually lined up with the recent resistance line. So now you can add in technicals to that. That's why I use EMAs as take profit zones, as stop losses, as pullback zones, as hits, because they all bounce in between each other. So the prime time that you guys should be trading is when it's in between the EMAs. Either in between them or beneath them for a downtrend to hit off of them to retest, or above them if it's an uptrend. That's it. It's a simple process. It's going to go up to there. It's the first pullback zone it has to hit is the water. It hit it once. Okay, well, it's shooting up again. It's got to hit that water up here, come back down, retest, break it, retest, go up to the next one. Same pattern. It's just about being patient, waiting for these patterns to happen. We got more questions. Divergent. Oh, wow. Yes. So let's see. How do we do this? So another part, I didn't kind of go over the TDI that much. If you guys see these, you guys know what Bollinger Bands are? Bollinger Bands are another way that we can look at it is I'll even insert them. Trend, Bollinger Bands. All right, I don't care if they are. See how the price kind of, it just goes on the outside of it? And seeing the same thing here. So the Bollinger Bands on here are the exact same in the TDI, except I just don't use them on the price because price is not normally right. So I use them on the TDI because when RSI goes in and out of them, I can predict the volatility in the market. The tighter they are, the less movement you see. The wider they are, the more movement you see. So they literally predict volatility in the marketplace. So if you see that the Bollinger Bands are really wide out, there can be some movement in the market that week, that day, that month. So let's see. This is the 1 hour or the 4 hour. What did it look like on the daily? What happened? As it dropped, it started to spread out. Right? One started going upwards, one started going downwards. They start opening up, so does the volatility. So opens up, more volatility. Gets really tight, less volatility, no movement in the market. So it's another way for me to predict. I don't really trust this pair right now because the bands are too tight. So I'll probably not play that pair until it breaks out, reverses, or hits an EMA to go back with the trend. So I can literally predict. It's another way that I will do the process of elimination of which pairs I'm going to play. Oh, this pair is too volatile, or this pair is not volatile enough. It's just going to be going up and down, up and down, up and down, and you're not really going to get anything. I even tell people, here's an example of why I don't trade certain pairs. You see this? This is called bullshit. That's bullshit. Because, like I said, EMAs tend to what? EMAs, when they become support resistance, they can also become barriers, right? So they literally become like a wall. Up and down, up and down, up and down, up and down. And it's going to just keep doing that until it finally breaks out to the top or breaks down to the low. So I literally told people my analysis today, I was like, don't trade this. You trade this, let me know how your feelings are in the morning. Let me know when you take your eyes off of the chart, because you're not. You're going to be on your phone all night. Because this is not guaranteed. This thing can go up, it can go back down. Look at that. Why? How do you know that's going to happen? There's no way you know that's going to happen. That's impossible. Again, if you're a fortune teller, please come to me. Let's do some business. We'll get some future investments going. But look at this. Look how tight they are. They're getting tighter too. See if I can find a really tight zone. 1 hour. If it loads. Oh, it did load. Okay. You see that? Look at that. Look how tight they got. They're right there. Another reason that you can also predict this is, do you guys know what NFP is? Non-farmers payroll, first Friday of every single month. The market will send out the unemployment rates of the economy, and they will do some fuckboy shit. They will shoot the market up and back down. They can do that. That's why I don't trade the Fridays. Mondays and Fridays are trap days. Those are the days that the banks and the market makers will move price in the wrong direction on purpose to get you to induce it to come into a trade and they shoot against where you just placed because they look at the total numbers, and then they cause fear and panic in the market after they convince you to induce a trade, and then they hit your stops, and then they continue with the trend. How many times you guys been in a trade where it's like you just got in too early, and then it ended up going in the direction that you wanted it to go in like 2 days later? That's them hitting the stops. That's them because every single other person in the world was doing the same thing that you did. They saw those numbers. They literally have a button in the back of their MT4. They have an excess program where it's literally a stop button. They click one button and it hits all the stops of every single person that has trades on that broker account that they have. So whoever these brokers, this is LMFX, this is what I use. Whoever is in control of this broker has a button that can control when price is going to do this shit. They literally click, hit the stops, and where majority of them will flake them. They'll do that. They can literally do that. Nobody knows that though. There's literally a market maker handbook that tells you that, which if you guys want that, I can give it to you for free. It's a PDF. You can literally, everything that I'm showing you guys is literally in a handbook. It's like, it's a PDF you can read through. It tells you everything that I'm telling you right now. That's what I read. And when I read that book, that's when I actually hit my first 4-figure day. It was a double top off of the Mayo, kind of like what we just saw in GU. It was a double top off the Mayo. I mean, this is the weekly. And I literally just sold it. I played GJ, and I kept entering in, and I made my money. Flipped an account that day. It was awesome. I flipped $50 to 5 Gs in 6 days. I flipped $12 to 1,000 in 3 days. A lot of horrible risk management, but with precise entries based off of what I'm telling you guys right now. If you can predict what's going to happen on these time frames, bro, you're good. You just got to find the pull. Oh, so this is going to be a straight drop for 3 weeks? All right, cool. I'm just going to look for the pullbacks to the upside and trade it down again. That's it. Oh, it's going to be a downtrend. Okay, pull back, sell. Pull back, sell. You can keep reselling until it hits that EMA in a higher time frame. You can literally place, if you want, you can literally place a box from top up from what was up here, go down to the hour, and notice, oh, so I have from this area down to here. Okay, I could have entered here, could have entered here, could have entered there. There's multiple areas until it hit the zone. And what happened when it hit that zone? It hit that water on the zone on the weekly, and it consolidated. All this right here is 2 candles. That right there, these 2 candles is all of this. So I saw it hit that. When I saw it hit that, the weekly water, I was like, this pair is about to be consolidating. And I even said it on my group chart analysis. Say it all the time. I'm like, it hit the water, so expect something crazy like this to happen. And that whole next 2 weeks, it didn't move. People were thinking, oh, it's got to pull back. Well, it didn't. And the only way you're going to be able to tell is after these patterns start showing more and more and more. You're going to see that it's not really divergent. And if it's not divergent, don't trade against a trend. If you don't see any signs of a reversal, keep playing the trend. My signs of a reversal are double tops, double bottoms, and divergence. The moment I see divergence, I stop trading. The only time I'll trade divergence is back with the trend because it's guaranteed to keep going down in that direction until the next low is taken out, until it doesn't break that resistance or support depending on the direction. But going back to these, the Bollinger Bands are able to allow me to see like what's going to happen. So I see that on the hour, it's pretty wide open right now. So the volatility is pretty good. It's probably going to move tonight, like I predicted. And we're going to catch some pips. So the volatility, actually, you'll notice too, between the EMAs here, from here to here, if you go back on every time frame and see these trades, when they're going in between them, you'll notice the volatility is really high. The bands are open. It's prime time to trade because they're going to move from here to here. It's going to hit it. Gonna hit it. So expect GU to rise tonight. Let's see what it looks like on the daily. Through a railroad. It's oversold. 4 hour. It's gonna shoot up to there, to that water. I don't see any crazy divergence here. It is oversold here, which is why I'm seeing this, ready? Got price coming down. You have price oversold and divergent going up, which is why I'm saying it's going to eventually, when I see this, I already know that when eventually it's going to hit that water. It's just a matter of when it's going to happen. So this is, quote me, it's going to hit the fucking water. Bet against me. Sell this. I guarantee you'll lose until it hits that. Then you can sell it. It's not a signal. I don't give out signals. Holy crap. What are you guys doing in the chat right now? Yes. Oh, wow. Yes. Money day. What are those RDL? Oh, recent daily lows and recent weekly lows. So I have these indicators right here. It literally just tells me like the most recent daily low compared to like recent price action and support resistance. Oh, you already answered that. Okay. Can I get the PDF file? Yes. 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 Cool. Good shit, T. Thank you, T. What else do I use? Let's see. M's, W's, I said. Head and shoulders. Divergence. TDI is like, it's complicated. Oh, here I can go over this. This is why I like the TDI. I didn't tell you guys this. Let me go to GU. When you see, you guys see right here in the middle, that stationary 50 line? Oh, right here. It's really hard to kind of measure that. It's like, it's really hard to move it. Right here in the middle is the stationary 50. This stationary 50 is perfectly lined up with the EMA 50. Every time price hits the stationary 50, it hits the EMA 50. Every time price breaks the stationary 50, it breaks the EMA 50. So what's cool is that when you notice that price on the TDI is actually above the EMA, the stationary 50, it's an uptrend. If it's below it, it's a downtrend. So when there's breaks in them, that's an indication for either a reversal is going to be happening to continue back down, or it's going to form a new pattern, pull back, and continue back up to retest it. So I'll show you. Let's look. I'll bring it back like in time too. So this is the 4 hour. Look at it. It hit right off the stationary 50. It also hit right off the EMA. It broke the stationary 50 right here, or yeah, actually, right here. It broke it up there, and it continued down and stayed beneath it. And look what it did. It continued all the way down. You can do this one, right? Even like a simple thing, right? Broke it here, broke it there. So I use it to keep myself like understood of like, okay, like if I see if like it's on the daily and I notice that, okay, price is technically, all right, right now it's below the stationary, easily identifiable to say it's a downtrend. You can even see it here until it starts coming back to the oversold, because what's going to happen is this is called the liquid dip, the market baseline. It's not anything related to any of these EMAs, but what this market baseline does is that when it gets to an oversold point, price always makes a way to find a way back to retest it. It always retests it. What I've noticed is that the market baseline tends to line up with the catch-up at most points. So when this hits that market baseline, this is probably going to hit the catch-up at the same time. When it breaks it and cross over, that's my next indication to possibly see, like, look for a pullback on a lower time frame to continue up to that next EMA, which is either going to be the water or the Mayo, depending on where it goes. I don't think it's going to retest that high. What I actually think is going to happen is going to retest this catch-up and then just keep dropping, because these are too damn far. That is not, and it's not even divergent, right? So here's an example, right? I told you if it's not divergent, don't expect the overall reversal to hit that water or the Mayo. On this time frame right here, it's not divergent, right? So you got price coming down right here, and then you have price going up, down as well. But it's oversold, which is a reason why we're looking for those eventually pullback. But because these are both going down, I can't assume based off of this time frame that it's going to shoot up that high. I can't. What I can assume is it's supposed to pull back, and what it's going to do is it's going to actually hit that catch-up. If it's not divergent but it's oversold, it's hitting the catch-up, which is the water on the 4-hour and the Mayo on the hour. So shorter time period, you can catch pips going against the trend until it hits that catch-up on that higher time frame to then throw another pattern, such as a railroad man, etc., down to lower time frames to continue back with the trend. No divergence, no reversals. So you just keep playing down. So if you want to take like I said, if you want to take a really good trade, your best bet is waiting for it to hit that Mayo in a higher time frame, wait for the pattern, and sell the shit out of it. Because you'll get bigger drops. And you'll catch more pips with less stress. You can go to sleep on that trade. Go to sleep on 10 standards, you'll be in profit. Yeah, I'm gonna tell Sebastian, my Germany trader, the guy out in Germany that made 200 grand in the last 2 months, I'm gonna be like, yo, bro, sell GU. I'm gonna tell him, and he's gonna throw 20 standards on it, and he's gonna fly me to Germany. You better fly me to Germany, whatever he wants to do. Where? Star? It's just a star. I only look for them from when they settle in. When it's in the middle of price like that, I don't really use them. These sun indicators that you guys are seeing, it's just they're key points of possible reversal zone. So I use them with the trend. That's it. If I see them with the trend, like here and here and here, I can look for a pattern that happens slowly after them and then continue back down the trend. The ones I won't trade are against the trend. So the white ones that pop up, they indicate a buy, but because it's a downtrend, I'm not looking at that. It may predict a pullback, which is giving me the idea. It's like, oh, it popped up, maybe it's going to pull back, and then I'll wait for it to make its move, and then I wait for the next sun to pop up, look for the pattern, look for it to hit off the EMA, look for it to be divergent, something, and then I continue back with the trend. You can scalp it. Yeah, you can scalp it. If you want to go down the lower time frames, you can. I just don't like trading as a trend. It causes too much emotion, and that's not always guaranteed to shoot up that high. Yeah. But that's why I use them. It's not like my main thing, but they definitely helped on my recent flip from 50 bucks to 5Gs in 6 days. It helped. Helped me with the trend. Chat. Holy goodness. Oh, my fault to you. What's the name of the indicator T? Get with Ryan that question. Okay. So you use the ketchup and mustard for higher time frames and the water and mayo lower time. I use them at all time frames. They just help me identify where it's going to be going in that time frame depending on which time frame I'm on. So if it's on the daily and I notice that it has to hit the water and go to the mayo, that could be a 600 pip difference, and I know exactly what it's going to do for the next 3 weeks. So I know, oh, based off of this simple indication, it's going to rise for 3 weeks. I'm just going to look for pullbacks going down against the trend. And I'm going to wait for them to hit the EMAs. I'm going to look for the Ws. I'm going to look for the railroads. I'm going to look for the star. I'm going to look for the divergence. And I'm going to continue up until it hits that EMA at a higher time. So it would break the water, hit the Mayo. Oh, just break the water, retest the water, hit the Mayo, and then shoot back down the recent low. If it's with the trend, yes. So in this case for GU, I wanted to, it broke the water, it came back down to retest it, it's rising up. I think it's going to retest one more time and shoot up. Once it hits that Mayo, because of the downtrend, yes, I'm most likely going to be looking for a sell down there. Right, but can you use ketchup, water, and mayo for lower time? You can use it for anything. I mean, I only use the ketchup for the pullbacks. Because, okay, so another thing that I don't go over because it's not like the most important, it definitely helped for the lower time frames is when the mustard, which is the 5 EMA, crosses 13 EMA. That's called a shift candle. And normally what happens is every day in the market, there's a thing called a vector. And then it's like a vector is a hard push against the trend, right? So let me show you guys real quick. I don't normally teach this because I don't even look at it. I don't even look at it like that. I just overall know it's, what am I on right now? Okay. So every day in the market, so in this case, It's not the perfect. Let me see if I can find like a nice one. This is the 15 minutes. So you can do this. Well, at the beginning of the week, I don't like that one actually. Here you go. Perfect. Right now, you can tell overall that, and I'll highlight it so you guys see it, even though it's going to de-highlight it. This whole section right here. The trend is down. It's clear. You can go to the higher time frames. It's a clear downtrend. That means anything going against the trend is a vector 3, or what I call, I just say pullback. And what happens is the market makers will push the market in the opposite direction to make traders induce a position. And what they do, the best way to get on it is they get all this. Like what happens is the number is 3. The psychological number. Once people see price moving in a certain direction after 3 pushes, 3 anything, they're like, okay, the first time, oh, maybe it's just a false move. Second time, it's like, oh shit, I missed it. Third time it happens, oh, I'm gonna grab it, and then they reverse it against you, and you already lost. That's what happens. It's the fear of missing out. That's why they say 3. First time, oh, it could be anything. Oh, second time, shit. Maybe it is something. Third time it happens, it's definitely happening. And that's why they reverse it. So it shoots up against the trend. It actually retested a support resistance line, which probably could have drawn this a little bit better. And what did it do? After it shoots up against the trend, they throw a reversal pattern. That's double top. Watch this. Price is going up. Price is going down, and it's overspot. Divergent double top. It drops, and what happens is you get this thing called a shift candle right there. So you would have entered right there, and you would have caught, ideally, on the 15-minute chart, 30 pips. That's the market maker method. That's what was taught. What I was taught was to trade off the 15-minute, is to look for a V3, M formation, shift candle, drop down to the next EMA. Like the ketchup and the mustard is called a shift candle. So that's just letting you know that the momentum for it to go in that direction has been solidified. That's proper. But it has to be in the right sequence. Hard push up against the trend, M formation, or railroad, however it is, depending on the pair. Shift candle, drop down to the next EMA. Or down to the most recent low, depending on where it's at in the sequence of the EMAs. So it's just another indication. That's all it is. So if I see it cross, like normally what happens is like, if I see it on the higher time frame, that's why I like to use it on the higher time frame, because if I see it on the higher time frame, it just solidifies like, oh, it's going that direction for this week or that month, versus the 15-minute where it's mumbo jumbo. You may only catch 10 pips, but because you're psychologically wanting higher numbers and more pips, you get greedy and you try to keep the trade in longer, and you end up losing money. That's why I like to trade a higher time frame, because if you catch the precise moment, you catch 50 pips with ease, versus trying to trade on the 15-minute, and you're trying to get 50 pips, but you don't see the overall picture because you're more focused on a quick movement of the actual price. So what's this? That 50th, I'm trying to do that now. Everybody is. What is the name of the indicator that show recent daily? That's my personal indicator. That vector, that real advanced shit. Josh, it's the template you have to get. Okay, T, you're just answering everything. Oh yeah, talk. But that's not something that I like go crazy about, because I just overall like, oh, I just look for the pullbacks. That's it. Understand it's a downtrend. You're looking for the pullbacks to the ketchup or the water. If it breaks the water, it's going to the mayo. If it breaks the mayo, it's going to the blueberry. If it bounces off the mayo, it's going back down to the recent low or the recent high. Am I talking too fast? All this is like, I feel like I'm speaking like Spanish. So like, this is what it feels like to like know something and know everyone's just like, what are you saying? I don't know, just, I'll give you an A. Let's see. What else do I do? Overall, I mean, it's the same. Everything I just explained to you is pretty much what I do. I just do it on every time frame. Like, I start from the daily and I work my way down. So that's what I do. So Let me see if I can, I'll break down one of the pairs for you. Give you the analysis. Let's do GJ. So the first thing I'm going to do is I'm going to place my support resistance. Let's see. Let's go off of the hour. Let's go off the 4 hour. Let me see the daily. So you have resistance here. Not really liking that actually. You could draw this one, but here's the thing. If you're just drawing lines to draw lines, it's not necessary. Like price is all the way down here. This has nothing to do with what I'm looking at. So like I just go off of where it's at the moment. See if I can just go to the 4 hour. I'll match it up. So let me just draw this one here because this is technically a big zone of where it reversed. Right here. Look at that. Perfect. Look at this. Broke the line, came back, retested it. Let me see if I can go to the recent. I want to see where price is overall. All right, so this is where price is at technically right now. Here's the resistance. See if it lines up. About there. It matches up here. So this is good resistance. This is actually really good. Next one after that, I mean, not really anything over here. You got these ones probably. Here. See how that one. I don't like this one. Really? There you go. Price. Look at it. Even retested this one right here. Oh, just brought me back. Retested it right here. So these are solid lines. Those are pretty much the only ones I'm going to have on my chart right now. So after I draw that, I'll draw like simple support resistance or trend lines. Do this. That's all I need to know because it's technically a downtrend right now. I'll go to the hour. Oh, one thing I'll also notice too. Price is divergent. So it's hitting a wall and it's oversold. Price is going down. Indication. This is why I had GJ last night for a pullback. A lot of people were trying to sell it. It's a sell overall, yes, but there's market moves that have to happen before it doesn't. So my prediction last night was it was supposed to shoot up to that 1 hour water, which it did. And it threw a double bottom, which was divergent. Again, you can see it right here. Price going down, price going up, oversold, shot up. When I see this on the higher time frame and on this time frame, so it's like divergence, right? You have divergence within divergence. Normally when I see that, that lets me know like that could be a peak of a head and shoulders, right? Left shoulder, head, look at this. It lines up perfectly. The peak from right here starts right there. Notice this. This is extremely oversold and divergent. Another indication giving me reason to believe that this is 100% going up to the water, which is why I call it. Now it's about, oh, look, there's another support line that I drew. Look what it did. That's from fucking months ago. Perfect. I didn't draw that right here. I drew that all the way back, and it bounced off of it perfect. So where's it going to go to next? Bounced off support, resistance, perhaps the recent high. Retest the recent high. What do we have? So ideally, this is what we have to do. Either it's going to break that resistance. It's going to break this high because, look, this is actually, one, you have a double bottom here. 2, here's the most recent high. 3, here's the new high. 4, here's the new low. 5, breaks the new high, makes a new high, retests, shoots up to the nail. That's my prediction for tonight. So I have it going up, just based off of everything I just showed you here. Once it hits there, then I'll start looking for possible consolidation zones, maybe an M, maybe a railroad, to go back down to where? Oops. Down to the recent low. Or will it be, you get it? Because it's overall on a higher time frame what it's supposed to do. That's the pullback. This is the water on the 4 hour. Once it hits the water, it always comes back down to retest. So once this happens, selling that. And a lot of the GBP pairs tend to correlate. So if you notice GU, GJ, GG, GCAD, GA, they all correlate. They all do the same shit. If one happens before the other, you can predict the rest of them. But GJ and GU correlate. Sometimes GJ will make its move sooner because it's a JPY pair, and it will move during Asian session. GBP USD doesn't move until London and New York. So if you see GJ moving, oh, it's shooting up, it happened earlier, you can probably predict what GBP USD is. Like indication, another indication, little correlation pairs. What do we got? Do you trade London only? No, I do both London and New York. Can you pull the dollar index on your chart? If you do, then how can I get the dollar index shown in the chart? It all depends on your broker, I'll show you. Simple Forex, yep, there you go. In my chart, can you pull the dollar? You just said that, okay. If you want to pick up currencies, for anybody that doesn't know how to do it, you click this icon on the top left of your screen, and you, depending on your broker, you don't get all of these options. Right now, I have, stocks in here. I can do Apple, Google, Microsoft. I can do coffee. I can do certain commodities, gold, silver, and every other cross currency. If you guys don't see all these pairs, if you have this broker, all you got to do is click Show All. So if I click Hide, it's going to delete some of them. If I click Show All, it's going to show all. So you guys probably don't have all that stuff. So if you don't have it, just right-click it, show all, and you have all the markets. Every broker is different. JAFX is different. LMFX is different. Traders Way is different. Liquid FX is all different. Every single one has a different currencies. But yes, that's how you're able to do it. So like for instance, you said the dollar index, right? So here's the dollar right here. You go show chart. This here, bam, 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 bam. And you'll notice too, this is the dollar. This is literally like the US dollar. You can trade stocks with this method. Off the water. Bitcoin. Who trades cryptos? Same shit. Same shit. M off the water. Drop. Head and shoulders, small head and shoulders. And I'll break it down. Look, price going up, price going down, divergence, left shoulder, head, right shoulder, drop. That right shoulder is a railroad, by the way. Double top. Price, hit the blueberry, close of the candles going up. TDI overbought going down. Divergence. Predicted this whole trend. It works on everything. You just got to find the right indication. So it's not like, oh, it's specific to Forex. You can use this for stocks, Forex, cryptos, anything. You just got to find the right things. Divergence is my favorite thing to find. Once I see that, I'm like, oh, it's going to do something crazy. It's just going to drop or it's going to rise. I'm just waiting for that drop, and guess what I'm going to catch? I'm going to catch that pullback. That's guaranteed. If it's properly in the right area. Like, look, double top, drop, pull back to the water, guaranteed drop, 50-50 bounce, guaranteed. That's guaranteed. All of that. So simple. It's scary. It wasn't simple, though. I cried most nights trying to figure this out. Mom, this shit's hard. Mine, go to sleep. Okay, Mom. Can you pull the dollar? I didn't know that index applied to the stock. Yes, it's a dollar. The dollar moves, all these currency moves. The dollar inversely correlates with the gold. So if the dollar rises, gold drops. Oil inversely correlates with USD CAD. So if oil goes up, USD CAD drops. It's a lot of inverse pairs. It's pretty cool. AU. When AU drops, GA rises. Cross currencies. That's why I like these pairs. I literally trade these pairs because each and every single one of them affect each and every other one. Euro USD and GBP USD, the cross currency between those pairs is EG. So when you see, for example, this is called, what's it called? Price, I always forget the thing. It'll come to me. When Euro USD and GBP USD are not moving, and they're they're literally consolidating in price, and they're not really moving, that's because they're working the cross pairs. So if Euro USD and GBP USD are just consolidating and not moving, go look at EG. I guarantee it's moving like crazy. GBP USD, AUD USD, they're both consolidating, not really moving. Go to GA. So if I see certain pairs not making moves, I immediately just go right to the cross pair. Hence why I only trade these pairs. Because I know what they all do. No, they all correlate with one another. Chat. 50-50 is when you bounce off the stationary same time as yep. Yes. Correct. Does that make sense? Cool. Is there any questions? Anything. I know I said a lot. I know not everybody's going to have the retention to remember it all. Yeah.
Or the candlesticks when they're railroad, what does that signal?
Depending on which direction it's in, if it's a downtrend and you see a railroad going down, so it's a green candle going up and a red candle going down, that signals the end of a pullback and a possible reversal, going back with the trend. If it's against it, and you notice that it's a downtrend, but you see it on the bottom to go up, that can indicate a pullback for it to go to the next EMA. Yep. So they're just specific candlestick patterns that, let me see. Let me see if I can actually show you guys something, because we're all on the same thing. Let me go to All-Star Trader Movement. We'll go to, let's see, this one. TeamATM.co. You guys are in the team group, the group team, right? Okay. I don't know if you've been on this website yet, but most of the people that are in this group are pretty much doing the same thing we're doing. If not, then I'm sorry that you look lost. My fault. Yeah. Life. Password's Pip Life. Swag. And what we do is, where is it? I think it's at the bottom. 20 steps. Here it's pretty much a lot of the basics. So I taught you guys some of the basics and advanced stuff. If you guys want to know like all the basics, go to this website. 20 steps is put together by a good friend of mine, Daniel Westby, top leader as well. At the bottom of this page, what is going on? Here, bottom of the page, reversal patterns. It'll show you the best reversal patterns if it loads. There we go. So another thing that I use, bullish flags, bearish flags, they're just little channel moves inside of the market. After it pushes down, it'll form like wedges, ascending, descending triangles, bullish and bearish flags / pendants. And these are some of the candlestick patterns they throw. The ones that I like are, this is technically, if you're outside, I just look for this. That's it. It's a railroad. This is a form of a railroad. I call it a morning star. Shoots up. Here's a perfect, it says it's engulfing. It's a railroad. Identify it, it's a railroad. That's another morning star, railroad. As you see, most of the pairs here, they all look like that. You know what I mean? So it just signifies specific patterns. Why, like when I find them, I tend to watch them and see. They're the ones I pay attention to the most. And you guys can get this for free. You can download it. They're pretty cool, actually. But yeah, that's what I use. What? Yeah, it's in this website. So the 20 steps I showed you, it's on the group page here. So if you go to the group page, right there, password pip life, go to the steps, and at the bottom of the page, you'll see reversal patterns, the strategy guide, which is psychology and risk management, and then certain indicators like stochastic and whatnot. But that's what that means. Oh gosh. Somebody get cash. Jesus. All right. If that is that, let me go to this. One more. What's the name of the indicator that show the reason? That's my indicator. You can't get that anywhere. It's literally, I think it's the work time. That's what I have. That, or it's actually the panels. That's a custom indicator. It's not something you can get. You already answered, dude. T. Answering everything before I even look. I just start watching everything. But all right, so let's see. Maybe I could do like a little testing. Do a little testing. Maybe a pair that I haven't looked at, haven't done yet. I don't like that one. Let's try GA. I'll clean this up. I'll go here. All right. Does anybody know what could happen here? I'll zoom out. Well, I'll help you out. Right now, it's overall a downtrend. 4 hour and daily. It's a simple pullback too. Right? So actually, on the higher time frame, this is technically an uptrend. Right? So you got a low, you got a higher high, got a higher low, got a higher high, and it could possibly be forming a higher low as long as this one right here doesn't get taken out. All right, so now that we identified at a higher time frame, it's an uptrend. That means widths go down to here. I don't see divergence, right? So there's no divergence, meaning we don't look for crazy reversals just yet. Do you guys see anything on the 4 hour? Where, right here? Price going down? Mm-hmm. So you got divergence, that's good. Yep, right there. Just based off of this right here, right? Just everything I just showed you. What's the first, what do you expect to happen just off of this simple divergence here? To what? Right? You solved it, perfect. So you know, based off of this, it's gonna probably shoot up to the water. Next thing you do after you clarify where that's going, break it down to the hour. You look for precision. Now you're looking to snipe the market, right? So we see here, here's the water, here's the Mayo. If this is true and it's supposed to go up to the 4 hour water, what has to happen here? What does it have to do before it gets there? Break it and retest it, right? Another problem solved. Boom. All right, if it's gonna go up, it's gotta retest, it's gotta break the water first, it's gotta come back to retest it, and then it's gotta go up to hit it. Perfect. And it's divergent still. But it's also a downtrend. So let's say this doesn't break it, what's supposed to happen? If it doesn't break the water, what's the next thing? It's a downtrend, right? So if this is a downtrend, it doesn't break the water, it's gonna what? It's gonna make a new low, which is also what's gonna do. Because I like to look for guaranteed dips. I don't like to say, oh, it's gonna drop here. You know what I mean? Like if I can go farther down. Retest the low, right? So if you wanted to take this for a sell, guaranteed, you take it to the recent low, you'll catch some pips. Because if it doesn't take out that recent low, guess what that is? A double bottom. If it does take it out, you got divergence. This whole part could be divergent as well, and it shoots up, then breaks the water and continues up. Either way, if it doesn't break that water, it's got to retest. So you know the two, this is how I do my analysis. I literally give you guys 2 or 3 options. It's either going to shoot up, break it, retest, and go up to the next EMA, or it's going to retest the EMA, throw a pattern, such as a evening star, and continue back down. And this is the 1 hour. So if you catch this, and this is GA, right? So this is a good moving pair. If you catch this right, it comes up to retest that water, doesn't break it. Good night. 80 pips.
Oh,
Yeah, play the standard on that. At $800 off of just two simple things. Like, you guys solved it. Like, that's it. It's that simple. Oh, you guys are answering. Retest the water. Yep. Continuation. Yep. Fuck, you guys are good. So that's it. That's literally out. So now, because this happened, we're in limbo. You know the term buy low, sell high? Or what is it? Yeah, buy low, sell high. Is there a term for the middle? No, there's no term for the middle. So the only time you trade the middle is only based off of the EMAs and when it throws a pattern to retest it. That's the only thing. Other than that, I don't like predicting reversals. So this is something where the only time you play the middle is when it's only bouncing off of EMA. If this doesn't break it, we're going for a sell. If it breaks it, to retest it, you're looking for a buy. Take profit, recent daily high, which should line up directly with the Mayo as it starts to fall. And you catch, if you just go for 30 pips consistently on this pair, that'll be easy. It's this from here to here is 80 pips. You can catch 30. If you want to even be safe, you know what? I'm only going for 30 pips. Damn near place your fucking put right there. If it's gonna retest, you know it's gonna hit there. It's guaranteed. So that's it. You just solve GA. That's what I look for. The only time I tell people not to trade is when it doesn't look like this and it looks like that. If you see price looking like this and you see the EMAs getting closer, don't trade because you will get that. And I will show you. I will backtest this even more. Mm-hmm. Bullshit. 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 See how close the EMAs are? Bullshit. You're just looking for the mega bullshit. You're just looking for, look how tight they are. Imagine the EMA is like a rope, right? If you have the rope just flimsy, right? What can you do? You can flip it, you can twirl it, you can move it. It moves. What happens if you pull a rope really tight? Shit ain't moving. It's the same thing with this. If the EMAs are extremely tight, like that, price is gonna be consolidating, fringing. This is when you can actually do this. You can place your support resistance levels at the tops and at the bottoms, and you can take that terminology, sell high, buy low, and apply it and scalp it. And you can do it on any time frame. So this is the 1 hour. So you could technically, if this was happening, you saw this bullshit happening on the 1 hour, go to the 15-minute. I guarantee you catch some easy pips because it's gonna go up between them. Yep, exactly. If they're wide open like so, you start to see how they spread out. All you're doing is looking for the hits against the EMAs. You go back with the trend. Vice versa, if this was an uptrend, the EMAs would be below the price. So, and you would just catch the pullback. Like, so right here, see how EMAs are below it? All you're looking for the pullback down to EMAs, continue. The only time you really don't want to trade is right here, right in the middle. Look at that, new low, new high. What the fuck? Like, that's not a trend. Oh, so you got a new low and a new high. What? I couldn't even tell you. As soon as I see this, I literally just like, don't touch it. I tell people avoid that pair. Don't touch it, because you will get emotional. Unless you like to, get emotional. Eat ice cream, watch Naruto, or Titanic, or The Green Mile, something like that. One of those horribly dramatic movies. They're not horrible. But yeah, that's it. It's like the same concept. EMAs are tight. It's a rope bouncing off support resistance. If they're spread out, you're looking just for the pullbacks according to the trend, and that's how I do it. So we got more questions. Did T answer it? Let me just make sure. What is the term What do you mean? The term. I have the term. Unleash the retest. Yes. All right, cool. I mean, shit, I just damn near showed you everything. How do you draw trend lines? We all know how to draw trend lines. I'm trying to keep it. What else do I know? So, do we all know how to draw trend lines here? Okay. I don't want to get too basic here. Give me a Starbucks and we might have a good time. Might be a basic white bitch here. Just need my star, even though I had some earlier.
You ever go from
So if it's a downtrend like so, like for instance, if I see this right here, first thing I'm doing, you never draw one on the bottom unless it's a channel, right? So that means that what I do, if it's going to be going down, if I see this, instantly just assume draw it on the top. You can play it out. Let's see if it played out the right way. I'm going to do this here. What the? It moved on me. What the hell? Let's see if I can. Okay. Price still there. And we got the retest. We got 1, 2, 3. So in order for it to be a valid trend line, it means that it hit at least 2 points. If it's got 3 or more, it's a very, very strong trend line. You can draw those out and possibly put them into future price so that you know, hey, in the next couple of weeks, it's going to retest this actual trend line. You can use it. So look at this. It came down, and look what it did. It obeyed it. 1, 2, 3. Drop. Future price. So if it's downtrend though, or if it's going to be an uptrend, you do this. Drop from the bottom, draw it up. So here's the price. Retest. You got 1, 2, 3. Let's see what happens. Oops. So you got this. Draw this out, right? 2. Look what happened. 1, 2, 3. Came up. What happened when it broke it? Came back, retest support, and it continued down. So you can use it as the same concept. Breaks trend lines, retest it, it drops again. Yep. So it helps you identify possible reversal zones as well. So if you combine that with divergence, double tops, head and shoulders, recent lows not being taken out and whatnot, yeah, fun time. Predicting the market and shit. I guess that's why people say I'm accurate. I have a unique way of looking at things. Even though it's not unique, it's simple as fuck. But very simple. It's just do it over and over and over again. What I can say though is you really have to know when not to trade. That's the problem. Is because you can take all this knowledge, understand it, and if it's not on the right time, and if it's not in the right sequence of EMAs, everything that I just showed you is going to go out the window, and nothing's going to make sense because it has to follow these rules. Like I said, the only time you don't trade is when it's doing this, because then it doesn't bounce off the EMAs. It doesn't retest them. It goes in the middle like this. It just doesn't really move. There's nothing. This is when technicals really come into play, because then you could just play support resistance and buy here, sell here, buy here, sell here. Like that's it. But other than that, like that's it's easy shit. The other stuff doesn't. That only applies for when you actually start getting the trends and the lower lows. So really, with my method, you just got to know when not to trade. If you know when not to trade, you'll be good. Have a fun time, make some money. Yeah. Well, I'm not playing this pair this month. Not doing that. You get picky. There's 36 pairs. You can find one pair that's moving. Why do you got to play the one pair that looks like this? Why do people do that? I don't know. They get obsessed with the money. They try to prove a point so they can make a status on Facebook. Look what I caught. In reality, someone's like, oh, that's cool. And then they keep scrolling. Nobody cares. Forex is a side hustle. Bro, like I want Forex to be so side, like, bro, like take your money that you make right now outside of Forex and put the money, a specific percentage into your account that if you lost it, you don't give a shit. I call it fuck you money. Because if you don't really give a fuck. Jordan Belfort calls it fun coupons, right? Take a percentage of whatever you make outside of the industry in Forex. So let's say you make So you make $1,000 a week. $100 or $50 is not going to kill you. So put that type of money in there just in case you lost it mentally. If you really lost it, you're still good. And deal with that. I hate when people like try to throw their rent inside of their account and try to flip it, and then they blow it, and now they're just like they're homeless. I don't know. They try to get that quick cash so fast, and if the market's not lining up correctly, they'll try buying this, and they'll realize, oh shit, it actually dropped. So just gotta get really, really picky. LOL. Yes. All right. Cool. Well, any other questions? I mean, it's only the first time doing it. The more you hear it, the easier it gets. Because next Wednesday, saying the same shit. Maybe you'll catch something different. It's like reading a book, right? You read the one book, then you reread it, and you saw something you didn't see before. Oh, that's why he killed him. Fucking asshole, deserved it. It all makes sense now. But it's like, here, it's like, oh, you may not know the EMAs, but then you'll catch something on with the TDI, how they correlate with one another. And like, oh, shit. Aha moment, done. I have aha moments. I did have aha moments like every day for 3 years. Now it's just the same repetitive shit. I look at it as a game. It's all about your perception. Are you a code programmer? No, absolutely not. I just became really obsessed with this. But yeah, that's it. I mean, that's how I train. That's how I look at it. If you guys have any questions, like after next time you guys come through, like please bring people. I really just want you guys to understand this, because the moment you don't need me anymore, my job is done. The moment you don't need anybody, the moment you can just be like, yo, I'm gonna go to Barbados, pay $3,000 to get there, make $5,000 when I'm there, pay for your whole trip. I flipped that $50 to 5 G's when I left Jacksonville, Florida, drove to Minnesota, and down to AZ. I made all that money driving, trading on my phone. So I paid the whole trip and some. So it was fun. So imagine being able to pay for a vacation or a trip and then making it all back in the same day. That's the power of the shit we have. If you do it right, then you're good. You're good. So does anybody here on Zoom have any questions? This thing's about done. Trading is addicting as fuck. You are worse than me. You, sir, are like, dude, I've only seen your bed. Like it's really, so you got the cameras in the bed. I got the red bed. That's where I only see you there. And then occasionally, like on Instagram, your foot's kicked up on the chair or something. I don't know. But it's the same shit. But okay, cool. If nobody's got any questions, I'm gonna end this Zoom. This was recorded, so if you guys want this, once it's done, I'm gonna put it up on YouTube. I'll put it inside the group. Anybody can look back on this. You guys can use it for future reference, or just keep watching the shit. So let's go. Let's fucking hit it. All right, guys. I'll talk to you guys soon. We'll do this next Wednesday. I'll see you guys later.
Thanks for putting this on, man.
Absolutely.